Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting this evening. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen okay. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know in the chat box. As always, keep in mind, no one trade is guaranteed to profit. I think we all understand that. In one way or another, you should manage your risk in a way that makes sense for you, with a combination of proper trade sizes, stop loss marks, maybe hedge positions potentially. You also can make use of our special feature AvaProtect that's available on our web trader platform and AvaTrade Go mobile app. In some combination, you could put together a risk management plan that makes sense for you. Now, the other side of that is each and every trade that you take also has potential for profit. That's the point of why we're here, to try and come up with the best way we can think of to go after those potential profits while managing our risk in a way that makes sense. Keep in mind that what we go over is coming from an educational perspective and not to be taken as financial advisement. Now, real quick, what is fundamental analysis before we get into the news and the live charts? Basically, it's the news. It's what's going on around the world. It's regular economic events that are scheduled on an economic calendar. It's also breaking headlines about things like potential war between Russia and the Ukraine, or a global pandemic, or Brexit, or whatever it has been in the past, and whatever it will be moving forward. The unexpected headlines that you just don't know what they'll be or when they'll come. That's what we refer to as the extraordinary economic events. And really, it's not necessarily an economic event, but it's an event that can affect the economy. War, I don't think we would call an economic event necessarily, but it certainly can affect certain instruments that are available to trade on. They might sound opportunistic on something that's pretty negative in the face of it, but that's the way the market moves sometimes, is in response to negative things, and you can actually try to capitalize on some of the movements that are related to those things. Now, the unexpected headlines are probably going to be using some combination of pending orders in strategic locations at price levels that you think it would take a big event to get to. And we'll go over some concepts with that of how to kind of put trip lines in the market, so to speak, to be prepared for unexpected headlines that could move things like oil or gold or the major indices, etc. And then obviously also taking advantage of what you already know, maybe from the economic calendar, that sort of thing, or headlines that have already come out, to try and take advantage of the momentum as you see it, or lack thereof in terms of momentum, as today might make more sense. So if you have any questions as we go along, you want to give any input, please feel free to do so. Someone's asking if the Winter Olympics could affect the market. Certain companies, maybe, if they're getting a lot of exposure. China in general, maybe you'd expect a bump to their economy. Usually the host of the Olympics gets some sort of bump economically from hosting the Olympics. So you could try to read into some of that. I certainly won't pronounce to be an expert on the Olympic effect on the markets. Maybe it's just an event that doesn't happen often enough for some of us to really study it, to have studied it in depth. But I think if you do some research, you might be able to find some companies, some specific regions maybe, that could get some kind of effect from the Olympics, because there's certainly a lot of money being thrown around, that's for sure, and a lot of advertising dollars out there. Now, what we can start on is to take a look at, okay, what are the headlines right now? Fundamentally speaking, what's happening? There's not a lot going on today, really. The market's been positive, as we see here. The markets have been in the green today. Volatility has been down, so fear has been down a bit. It's been kind of a slow, gradual climb with the markets today. Nothing excessive in terms of volatility, and so it's been a slow, steady climb up. And some headlines we've seen, we've heard enough about tensions between U.S. and China in the past months. Now, what we're looking at here is some of the promises that China made to Trump when he was president, to the U.S. when Trump was president, regarding promises to buy exports out of the U.S. into China, some of the trade deals that Trump was negotiating when he was still in there. Turns out China didn't live up to their promises. That's what this headline is saying. There was a shortfall on the amount that China promised to import in terms of U.S. goods. And so they've kind of defaulted on that promise, which maybe doesn't surprise a lot of people in terms of that deal maybe not being followed through on by China. Maybe if President Trump was still President Trump, with the large threats that he liked to make economically and about tariffs and such, maybe that would have turned out differently. But that's the situation as the headline is showing it, but not really a big market mover type headline. We're looking at tomorrow. We do have crude oil inventories coming in. There were not very many announcements today that you would call major announcements, but we do see crude oil inventories coming in tomorrow, which certainly could help move crude oil prices. And they've been at multi-month highs of late, both Brent crude and U.S. crude prices. And so that'll be interesting. I think there's a lot of potential for crude oil movement. After all the climbing, there could be big potential to drop depending on how these crude oil inventories shake out. If the supply comes in a lot higher than expected, that could work towards maybe slowing the climb of oil price up. Another headline that could affect, maybe not initially, but in the longer run, the price of oil. I have someone saying they can't hear, so let me just confirm. Type OK if you're hearing me still. If you're hearing me properly, type OK in the chat box. All right, great, thank you. I'll just type a note that it's just a couple people who don't have their audio on properly. Okay. All right, so this headline says as oil nears $100 a barrel, they're talking about U.S. crude. U.S. drillers get busy in costly shale basins. To kind of undress that headline, what they're talking about, shale drilling is more expensive. It's a more expensive, labor-intensive process to get oil out of shale. And when prices were 50 a barrel, even lower, just wasn't profitable for getting oil out of shale. The cost of getting it out to then sell it for less than what it cost you to get it out of the shale. So now that the price is well above 50 and nearing 100 a barrel, all of a sudden it becomes a lot more profitable to drill into shale and get oil out of shale. And so if the shale industry gets rolling, that could add some more supply to the situation, and maybe thoughts of that occurring could create some bearishness on the price of oil as well. So it's something to keep in mind. The regulatory environment with the Biden administration in the U.S. really shot the oil independence of the U.S. down quite a bit. They banned drilling in places that Trump had opened up. They increased regulations and really slowed things down in terms of energy growth within the U.S. in terms of fossil fuel energy growth as they push the focus with the current administration towards green energy, as they call it, and maybe energy sources that aren't quite ready for prime time, but they would like them to be. So it was kind of a mix of things that helped drive oil prices up around the world. Obviously, some other factors involved too with the pandemic and supply chain and all of that. So we're looking at another headline here out of Reuters. Peak inflation with a question mark? We can only hope. There are some signs that inflation might have peaked. That's what the headline, if you get into reading the headline, there's some optimism that maybe inflation has peaked, the hyperinflation, the inflation that's causing prices to rise faster than incomes, which is the bad kind of inflation. You want a healthy amount of inflation, whether the government sets a target of 2% or 3%, maybe 4% inflation to show a healthy economy with demand. But when you start getting 5%, 6%, 7% inflation, and then there's fear that that's too high of inflation. And we see that with the cost of gasoline, with the cost of groceries, etc., houses, cars, you can go on. As the prices rise faster than income, then that's considered hyperinflation. And so there's some optimism that maybe inflation has peaked, especially since a lot of nations around the world are starting to say, hey, we'll pull back on the stimulus measures, we'll raise interest rates maybe up off of zero, gradually start to pull back on some of the stimulus measures to kind of slow the inflation down. And so there's hope that that's occurring, and maybe that's why when we look at the markets, volatility index is down pretty much all day today. The markets are rising gradually, not like an elated optimism, but more optimism than pessimism has snuck into the markets today. So it's important to understand that that's the fundamental situation, at least as we see it, before you get onto the charts and start trading, right? So you understand there's some optimism, there's maybe a little more positive headlines than negative, but you also need to understand there's still some fears about war with Ukraine and Russia, and some concerns still about should economies be fully opened up with this Omicron variant, etc. But there seems to be more optimism than pessimism today. Now, we can take a look at the mobile app, and I can bring that up here on a full screen view. And within the mobile app, let me go back to the home page here. Within the mobile app, there are some features that can help you with your risk management as you go about doing your fundamental analysis and technical analysis, which also can be helped by some features within the app and our web trader platform. So you can trade right on your MT4 and MT5 accounts from this app and also from our web trader and take advantage of the advanced features. Now, let's say you want to do some quick fundamental analysis on stocks, okay? European markets open, UK market, US market. You have a variety of stocks you can choose from, especially on our MT5 platform. So if you go to one of our advanced features like Market Buzz, which is found in this menu, you click on the tab and then scroll down. The tab there in the lower right is what I tapped on, and then in the menu I clicked on Market Buzz. It brings up the stocks that are trending the most. Meta platforms, it's the offshoot from Facebook, the parent company now, I guess we'd say. Meta platforms is the bigger company, and Facebook is owned by then Meta platforms. I think that's the way it works. And Meta platforms has a lot of articles out. There's been a lot of news about it. They've lost some value because things maybe didn't go the way they wanted starting out here. And so there are a lot of articles regarding Meta platforms. If I want to see those articles, I can just tap on it. Tap on the one you want to see, in this case, Meta platforms I tapped on. It tells you the expectation is it may fall, and it gives you the articles. The most recent first, and as you go down, articles that are a little bit further back in time, but you see only 48 minutes back, and we have 5-6 articles that are that recent within the past hour that have come out talking about Meta platforms or topics that relate to the Meta platform stock value. So very easy to pull up the article. You just tap on it. It takes you to the website where the article is. So it does that work for you to find the fundamental news that's most recent by scouring the internet and pulling tons of resources in for you to check out the stocks that you might be most interested in trading on. So you can get your fundamental news real quick, very easily and very efficiently. Let's say you understand the fundamentals right now, and you're saying, based on the review that we just did of the headlines, that you'd like to look at some signals coming in. So we can use the app. I'll tap on this tab down here again. I can use featured ideas or analyst views. It'll pull up the technical analysis for different signals. And so if I'm looking here and I say, okay, USD JPY expected to rise. Well, there's optimism on the markets. US markets have been rising. We saw that. The US dollar index was strengthening right along with that. And if there's lower fear today, it makes sense that a safe haven currency like the Japanese yen would be somewhat weak. So you take a strong horse, the US dollar strengthening today. The dollar index was in the green when we looked at the one website there. And the yen, you would expect maybe to be weaker when fear is down. So maybe you say, okay, that signal makes sense to me. So then you tap on it and you bring up the technical analysis. And so if you understand the fundamentals, we did a quick fundamental review, and now the fundamental analysis agrees with the signal in your mind. And I'm not saying this signal you have to agree with, but the concept is what I'm talking about here. You did your technical analysis, and looks like I got logged out. Let me log back in. You did your technical analysis, and your fundamental analysis, and the fundamental analysis tells you that you think the US dollar could be strong today, and maybe the yen could be weak because fear is down. And so you go to the signals, you look for a signal that would agree with that mentality, maybe as we see here, USD JPY. And so I bring that up, and I see that the signal's showing price levels where I might want to take profit if I'm buying. These two levels, it tells you the preferred direction is long positions, meaning buying. Long position means you're buying. As long as the price is above 115.10 but hasn't reached 115.85 up to 116.30. So your take profit targets are given in the signal, and the stop loss support level is given as well. If it drops below 115.10, they're saying the signal's no good anymore. So they drew your support level right here. You can see why that price level is kind of the bailout level. If this went down and broke below this price, then that kind of goes against the prediction, right? If it broke the support level, they're saying then the signal's no good. Then you would follow what they call the alternate scenario. The alternative scenario, if it drops below the support level, below 115.10, then they say look for further downside down to these price levels, which are the red lines here. So if it went the wrong way and broke this support, then they're saying you could sell and go after these price levels down here, which are the next support levels down. Okay, so fundamentally, the signal is driven that it probably should rise. But it's telling you if it goes bad, maybe your stop loss should be just below the support level, and then you could have a pending order waiting down here right now. Even if you're buying now, put your pending order also a sell stop right down here, that if it breaks below the support level and hits the stop loss on your buy, then maybe you're in on a sell with your take profits here or here. And that's all based on the technical analysis here. We see this as an old resistance level here, which becomes the new support level here. Resistance, support. It kept alternating, right? It was resistance, then it became support, then it became resistance, then it became support again. So this price level gives you a clear support and resistance level. And it would likely line up with the Fibonacci levels too, if you're into the technical indicators. This is a very obvious support / resistance area that technical traders would utilize. So the fact that it's in the signal maybe strengthens your view of the signal if you agree with the technical analysis along with the fundamental analysis that you do for 5 or 10 minutes before you look at the signals. So this is one that might make sense, and maybe we'll look at it on the full screen, and we'll look at some other ideas as well on the web trader. So let me just kind of close this view off, and we'll get on to the full screen web trader. And so if you log in here, you're on the web trader. And to get our app, if you're with your mobile device, you just go to trading platforms and go to AvaTrade Go. Okay. download the app either from the Google Play Store or the Apple App Store. You can just keyword search AvaTrade Go for that matter, and you'll find it in your app store. So all of the features I was showing you and more. I can't show you all the features every webinar, but we didn't even look at AvaProtect. Maybe we'll do that on the Web Trader now. So if you log in here, you'll be on this platform, which is the Web Trader, which functions with all the same functionality as the app. It has the same features available. So what are we looking at? We were looking at USD/JPY. So let me bring that up, if I can type it correctly. Okay, here's USD/JPY, dollar yen. And we're looking at 2-hour candles. It looks like the signal was right. The USD/JPY has been climbing for some time. Had you looked at the signal a while back, you could have already been, if you were following the signal, been in the money. Now we're looking at where are the resistance levels. If today we acknowledge that there's not a huge surge up today in momentum, it was a gradual climb. So is it possible that things could pull back some? Sure. So we could take a look and try and find resistance levels up here. And so I see on the 2-hour candles, there's some resistance here that it fell back from some days back, and we're near that level. Now, we could go to larger candles, see if we see a more pronounced support and resistance level, and actually we do. Now we're looking at 1-day candles, right? And we see this was a resistance area here, near the same price level that it plunged down from. It broke above once and came right back down and got stuck below it again, same price level. And here it hit on the 1-day candles and right back down, got near, right back down, and now here we are challenging this price level again. Okay, so we do have some resistance there, but if it breaks this price level, if the movement breaks through here, look at the room it has to run before the next resistance level. We're talking 100 pips up or more. You could potentially have a surge before it gets to the next resistance level on the 1-day candles. Let me pull this down so we can read it just a little better. If I can pull it down. Here, we'll do this. Let me delete the line. Let me draw a new one. I got it so high I was having trouble grabbing it. So if we're stopping at the wicks here, it's 116.28, 116.30-ish. And right now we're at 115.58. So what, about 80, 70 pips easy run before it hits the next resistance level, if it's going to break this resistance. And you could look fundamentally and say, okay, it's not a huge momentum today. There's no guarantee it's going to break this resistance. But what if you put a pending order up here? And I'll draw another line just beyond this resistance, like right there. If it does have enough momentum to break this resistance point, then it's perhaps got room to run up to the next major resistance up here. So you could put a pending order up here at this price, maybe 115.70, something like that. And if it hits that price, you'd be in on a buy position if you wanted to put a buy stop pending order up here. So you could come here and say execute when price hits. 115, I've got 74.7, let's say 115.75. You can say if it hits 115.75, if it breaks this resistance, we know there are interest rate increases coming in the US that have been promised by the FOMC committee, basically, perhaps 3, 4, even 5 increases this year. So there's a lot of reason why the US dollar could continue to be somewhat bullish. And so if it confirms upward momentum by breaking this resistance, then you could have a pending order up here ready to buy. Okay, that's the sort of technical analysis that waits for confirmation. Then your stop loss could just be right back down below at like 1560. So we'd have to break back below that broken resistance, which should act as support after that, in order to hit your stop loss. That's only 15 pips risk. And your take profit could be just before these highs that were reached not that long ago at 116, let's say 25. Take profit, 116. $25. Oops, missing a number. 116.25. Okay, so now we look and we say, it's a nice setup. Even though I'm waiting for a high point before I buy, which might be counterintuitive to many, but buying from a high point can allow you to wait for confirmation of an uptrend before you buy. And so you've got a pending order buying from a high point, but yet you still manage to have less risk compared to potential profit with the technical setup. With your stop loss being back below the broken resistance level if it does break up, which then could act as support, and your take profit being well before the major resistance level up here, and your ratio of potential profit to loss is still nice. So now you can say, well, how much do I want to risk? Remember, I promised you there are risk management features within the app and the platform that can help you as well. So if you've got the fundamentals down, long-term fundamentals, hey, there are interest rate increases coming maybe in the US that would strengthen potentially the US dollar. We're coming out of the pandemic. Maybe fear starts to drop, which would weaken the yen. So your longer-term move, this is not a scalp move. This is maybe a longer-term type move to go over a course of days or a week rather than expecting it to occur in an hour or something. So we're looking at this and we say, maybe I want to risk 1% of my balance. Okay, and you can decide to risk the percent of your balance that you want on each move, but you should at least understand how much are you risking. And so if I go into it wanting to risk X percent, then I can make sure that that's what I'm doing. And so I come up here and I say, okay, maybe I know I want to risk, I don't know, 500 on this move. And so I put one lot. And I look down here and I say possible profit 433, possible loss 129. Wow, I could do a lot bigger trade, only risking 129. So I do 4 lots. That risks possible loss 519 to that stop loss price. So maybe I want to go a little smaller. 3.85. Not 385. 3.85, that's better. And now I see, almost exactly 500. Possible loss, $500.12. Possible profit, over 1,600 USD. Okay, if I like that setup, then I execute that pending order, which will execute when the price hits this price. And so there I've got a buy pending order set up, and it makes it automatically the right type of pending order, which in this case, if you're using the MetaTrader platform, you'd have to know that you have to pick a buy stop pending order because we prepared that to buy from a higher price. It's a buy stop pending order. On this platform, you don't have to call it a buy stop. You simply program it to buy from the price you want. It makes it the right kind of pending order. Okay, now we can look at this in short term as well. I view that move that we just talked about as a potential long-term move. Now I can go back to the 2-hour candles and say, we do agree there's not a lot of momentum today. The markets have been climbing, but not a lot of momentum. And there are some fundamental news stories out there that could bring some fear back, like potential war between Russia and the Ukraine, some other things that maybe could stem up. And you could say, you know what, I'll take a shot that this could drop back down. And I don't have to risk much. So I've got a pending order in case it breaks through the resistance and tells me, hey, there's momentum up. We've got a pending order up there. But also, I could say for a market move, maybe I like the resistance level here. I say, I could put my stop loss above this resistance right here, resistance, 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 just up to maybe here, which is the entry point on our buy stop, right? on our pending order, and that could be my stop loss on my sell. So if I lose on one, then the next one opens with the momentum in the other direction. I've got a shot to make back that small loss and then some. So I can say, all right, I'll do a market sell. I'll put my stop loss up here at 115.75. I don't have to risk much to do that. And I'll put my take profit if there is a reversal. This could come down to the first support area, maybe down here. Okay, we see support, resistance. This was a breakthrough. Look at the momentum it took to break through that. Then that became resistance. And the momentum it took to break above this, large candles, and that became support and kind of a transition area at that price level. So maybe this is a spot where if it is going to pull back, it could find some support here because that was old resistance and old support back here. So you don't, on this move, if you're more of a scalp type move, maybe you don't want to be too greedy and you're saying, okay, if it hits 115.10, just above this support resistance area here, maybe that's a spot you'd want to take profit as an example. So take profit 115.10. Stop loss, we have it up here at 115.75. And so we say, okay, that's nice. Better than 2-to-1 potential profit to possible loss. Jamil, I'm glad you're here. Thank you for joining. Matthew, all of these webinars are recorded. So, and there are a lot of tutorials on our YouTube channel where these same webinars are posted. So by tomorrow, this webinar will be there. And there's a lot of stuff there about fundamental analysis, technical analysis, etc. Okay, so now I'm looking here and I say, all right, I like my setup. And again, maybe I said, hey, I want to risk 500 per trade. Maybe I have a balance of 50,000. I want to risk 1%. So whatever the case may be, you want to see your possible loss here and know that that makes sense. That's what you want to expose to your stop loss. So whatever it is you want to risk, you can make sure that that's what you're risking to the stop loss price on your exposure. So if that number for me is 500, then I'm putting, let me try 2 lots. That puts me at possible loss 320. So let me try 4 lots. That puts me over my 500 target, right? So I need to go back and say 3.5. That's a little high. 3.2, little high. 3 even. Puts me just under 500. So maybe 3.1 lots. That puts me almost exactly on 500 possible loss to the stop loss price. Okay, so there we go. I let the technical analysis and the fundamental analysis determine my entry point and my direction. And now I do the risk management here to make sure based on those entry points and stop loss marks and take profit marks that now I have the right trade size for the possible loss that I want. And then I can set this sell in motion now. Because this is a market move, instead of putting a stop loss, I could put AvaProtect. It's no problem. Instead of stop loss, or maybe in addition to the stop loss, I could put AvaProtect and say, you know what? I could protect this by the hour. I could protect this for a couple days. And it's near the same risk as I had to my stop loss. And in this case, it could go the wrong way forever, distance-wise. As long as it comes back before 2 days is up, I don't have to take the loss because I didn't put a stop loss in this setup, in this example. So for a small premium cost, especially for the shorter periods, a lot less cost, right? The potential profit is 12 times the cost of the protection in this example. Or if I do a longer time period, 1 day, it's about 3 times potential profit to the cost of the protection. So there you have options is what I'm pointing out here with your risk management when you use the web trader and AvaTrade Go mobile app. So let me go back to my initial stop loss that I wanted to put. I like that price up here in this example above the resistance and I sell. So I've got a pending order waiting in case my market move that we just simulated goes bad. If this drops, great, hits profit, I'm happy. If it goes the wrong way, hits my stop loss, okay, took a small risk, a measured risk that I wouldn't open the trade unless I was comfortable losing that amount. And now my pending order triggers because, hey, it broke the resistance. So now my buy stop kicks in, my pending order kicks in to buy because it established an uptrend through the resistance. And with these types of moves, because of the way we're setting it up, an opportunistic entry point near the resistance level to sell, waiting for an opportunistic entry point just above the support level to buy. So now our stop loss distance can be a short distance and the potential profit is much larger. And so with this type of setup, it's not the only way to do it, by the way. You can do the opposite and have a longer distance to your stop loss, shorter to your take profit. There are different concepts with that. But with this type of setup that we're simulating right now, you only need to be right like 1 out of 3 times and you'll profit. Okay, so different ways to go about going after profits, obviously. If your stop loss is further away and your take profit's closer, your win percentage is going to go up. But then your win percentage needs to be much higher to profit. If your stop loss is triple the distance and your take profit is 3 times closer, you need to win 3 times for every 1 time you lose to break even. So there are different ways to go about it. I'm simulating the method where we're trying to be opportunistic, where we don't have to risk as much, but the price levels are on our side with support and resistance. And it's a way most technical traders tend to go about things, is to try to not have to risk as much as you potentially could make many times. All right, any questions so far? We have enough time to look at another instrument if someone wants to suggest something to look at. I don't see any questions popping up. So let's look at crude oil. I think it's interesting because it's at such highs lately compared to where it had been for so long. So we're looking here and we see a sure sign that the bullishness of crude oil is still there. Look at this run up on the 2-hour candles, but it certainly met some resistance and came crashing down. So we have to understand, why did it drop from this price? And likely if we look at 1-day candles or 1-week candles, we'll see that this wasn't just magical why it dropped from this price. Something happened here maybe. And so let's take a look at 1-day candles, 1-week candles. On the 1-day candles, we still don't see it. There's no resistance here. So why did it reverse so quickly? Let's take a look at 1-week candles. We scroll back. We don't see it. Let's look at 1-month candles. And we don't see resistance even on the 1-month candles. Okay? So we'd have to go back further than what the chart shows us to try and find resistance. So that tells us, okay, it pulled back and it could be a temporary pullback potentially. Let's go to 1-hour candles. And we know crude oil inventories are coming tomorrow. So that gives the potential for a large move on crude oil as well. So the question is, fundamentally, where does oil sit in terms of what direction do the fundamentals say oil could move? And in general, as the US dollar strengthens, commodities tend to come down against it, right? So that's one thing working against crude oil rising further, is potential strengthening US dollar with interest rate increases coming. But there are conflicting storylines here that would cause potentially crude oil to go up. War between Russia and Ukraine. That could happen at any time and oil could go flying up. There's also the idea that OPEC could decide on short notice to say, hey, we're going to increase production more than we had planned. And that could bring crude oil prices down. So there's so many factors and variables affecting crude oil that you just have to decide, is the price point good for you for what you feel the fundamental news is right now? Not what could happen, because what could happen are a lot of different things. And so right now, what I see is a resistance level here, okay, that the downward momentum in the drop of crude oil here broke through, and now it found resistance right at that spot. You see it came back up, and that broken support from here, this was resistance, right? Resistance down, breakthrough and became support up. Now it had enough momentum to break below this level, and as it comes back up, found resistance. Okay, so the technical analysis here could say, listen, US dollar is strengthening today. We saw that going up against the yen. US dollar index was up. So that works against crude oil to be able to easily climb. Doesn't mean it won't climb. So you could do a market sell with stop loss above this resistance, and I don't have to risk much to do that. So if I want to sell here, put stop loss just above 90, which is where this resistance is. So 90.50, let's say. Somewhat of a technical move here. Just getting this above the resistance level for the stop loss. Take profit could be at the next support level, which is on the technicals right about there. That's where it hit and bounced up. Back here, it was old resistance. So that's down around 88, 83. So we could say 89 even. Take profit, 89. So we're looking at a little larger possible loss than the possible profit. If you're going after a take profit down here with your stop loss up here at 90.50. Maybe you could cheat your stop loss a little closer, say 90.25, and you've got a more 1-to-1 ratio for possible loss, possible profit. That's just a little scalp move, okay? Not a big deal, right? If you take a trade size that makes sense to you. I didn't go through the motions of the trade size this time, but we've got stop loss right up here above the resistance, take profit down here just before the support. Going with the fact that there's not a ton of momentum today, and potentially the strong USD could pull oil back down towards the support level. Now, a bigger picture move could be to put a pending order up here. If it does break above this resistance level, the old support, then if it hits, let's say 90.50 or 90.30, let's go 90.50. If it comes up and hits 90.50, well, then it's broken this resistance, and maybe it's on its way back up towards the high that it reached not that long ago, which was around 93. So at the same time, you're going short on crude oil with a market move. You also then could say, you know what, I'll prepare a pending order, execute when price hits. If it hits 90.50 up here, it broke clear of all this resistance. Execute if price hits 90.50. Stop loss, I could say, okay, $1 down, back below the broken resistance. So it's say 89.50 to the stop loss, and take profit just before the high up here. Let's say 93 even or 92.90, something like that. 92.90, just before that resistance level up here, just before 93. And so then we look and we say, wow, that's a nice ratio, 120 possible profit, 50 possible loss. Maybe I set my trade size again to my preferred potential risk, potential profit, whatever that would be. In this case, half a lot would risk 500 from that entry point, and put potential profit 1,200 to the take profit price. Okay, so there's a pending order backing up the little scalp market move on the sell. So market sell, pending order buy. I've got the pending order up quite a ways. It has to break through all this resistance and get up here before it's a buy position. And then you're looking to take profit maybe before the resistance up here if there was that much momentum to get up here. Just some ideas, the technical analysis. And the fundamentals are there why that could possibly happen. Okay, Matthew, I don't like to speak in likelihoods. Is it likely to hit 94? I would say if a war breaks out between Russia and Ukraine, maybe it's more likely to hit 94 than if it doesn't. But listen, you go after potential profits. You think about the fundamentals. Right now, crude oil's been pulling down. It's finding a support level. If it establishes an uptrend and breaks the resistance, of course it's possible it could get to 94. You see the technical analysis that we did here. We're looking at the high was around 93. So if you want to get out just before 93, the strategy that we're going over is to get out before it has a chance to bounce down off of this resistance. 94, that means it's got to break that resistance. And so it would need something fundamentally to cause that to happen, I would say. Doesn't mean it can't happen. It could. Something could stimulate that move up to 94. But if I got in down around 90 and it got to 93, maybe I'm not going to be greedy. I'll take my profit around 93. If it breaks the resistance and hits 94, okay, I didn't give up much more. But that's up to each trader. If you think it's going to hit 100, you can wait for 100 a barrel. Absolutely. All right, everybody, thank you for joining. This is a good place maybe to stop. We've been going for a good 45 minutes. Matthew, a lot of times the psychological numbers are round numbers, like 100, 90, etc. A lot of times traders are looking at those flat round, I say flat and round at the same time, at those round numbers, which are at a number that doesn't have anything after the decimal point. It's flat after the decimal point. And a lot of times that's where you see reversals. Like when it hit 93, it dropped right from 93. Not 93.15, not 93.21. It hit 93 and down it went. So a lot of times you see that. It's not always. It's not always at a round number with zeros after the decimal. But many times that can be a psychological level for traders. If gold hit 1,200 or it hits 1,300 or whatever the case may be as it was climbing or as it's coming down, those round numbers, a lot of times on the charts, you can see some support and resistance has formed in the past near those numbers. Good question. All right, everybody, thank you for joining. I think you'll see maybe some ranging movements continue this evening. Maybe we'll get some headlines that gives us some stronger momentum. But so far today, not a lot of major breakthroughs on the price movements. All right, everybody, thank you for joining. Good luck. Until next time, good luck with your trading.